Wouldn't it be amazing to get an extra $100 every single week to help with your grocery bill, your car payment, your mortgage, your rent? Well, that's what today's video is all about, utilizing ticker ULTY, the weekly paying dividend ETF by YieldMax, to get that extra $100 every single week because it does pay them out weekly. Welcome back to the channel, guys. My name is Spencer, and I talk about all things investing. And this style of video is one of my favorites because as income investors, as dividend-focused investors, we like to use these dividends to power our portfolios, to pay our bills, to have extra money at the end of every week or month. And so that's what these videos really show, is the power of using your money to save more money or to cover the cost of things in your day-to-day life. Now, it's not going to be exact. It's going to be a bit assumptive based off of ULTY going weekly only a couple of weeks ago. But I hope you guys enjoy. If you're interested in this style of content or if you find any value from this video, please don't forget to like the video and to subscribe to help me know to make more content just like this in the future. Now, let's jump straight into it and roll that intro. Sure, you guys are aware the stock market has been ruthless lately, and ULTY is a victim to that for sure. It is down 37% year to date. But a really important factor, this thing was paying monthly until about March 12, March 13. So from that point on, we are only down 13.61%, and that's not including the dividends paid out. So all in all, we're going to test it with the drip calculator, but it's been doing relatively decently. If we go to the 1 year chart, I mean, this thing is the definition of NAV erosion, yield trap, all the bad names you want to throw out about these income ETFs. It was terrible. I mean, this thing went from a price of above $16 to below, what, 7 into the 6s, which is just insane. I mean, your price is just dropping over and over and over again. So I think weekly was a really good idea. And let me tell you why I really like this now and why I think it's in front of more investors now, because it's so cheap. So you're getting a really high yield, which we're going to talk about in just a minute because their website, I didn't even believe it at first. You're getting a really high yield and a very, very low cost to enter because shares are so cheap. They're under $6. In our weekly account, where I put $100 into each of the weekly payers, ULTY consistently delivers the highest dividends, and it's not even close anymore. Consistently paying out the most in dividends. Of course, it has its ups and downs, just like the rest of them, but it has been the top payer every week since it converted to the weeklies, which I absolutely love for it. But I'm really worried. We just don't want a reverse split. If they can keep away from that and keep the NAV relatively, stable, that would be absolutely groundbreaking. And this fund could be a part of everybody's portfolio for just some insane weekly income. But let's check out the YieldMax website and see the updated distribution rate because it is insane. So they have it at 76.39%, which is crazy. Absolutely crazy. For our calculation, we're going to do our own number run and check it just since it started paying weekly to get the best average for what it has been paying out, both in money-wise and rate-wise, so distribution rate-wise. Now, we know, of course, the same details as always, the same fund overview, investment objective, its income, exposure to the share price, slightly to the underlying securities, yada, yada, yada. One thing, though, the gross expense ratio is 1.24%, which is actually insane. That might be the highest I've ever seen. I think the highest I've actually ever seen is 1.29. The net expense ratio 1.14. It's crazy. It's crazy. So these just keep getting higher and higher. No, I have seen one with a 2% expense ratio, but I mean, if people keep buying it, they're going to keep making money. And for those of you that don't know how YieldMax makes money on these, the expense ratio is how. So they're making a profit on that. For one, writing all the options, running the fund. The managers are making this money, of course. And so it is a bummer that it's higher, but when you have something that's very, very demanding, like these weekly payers, it's definitely what I would anticipate. So a bummer, but you get the pros with the cons. Let's check out the dividend history, run our calculation, and see what the actual yield for ULTY is. So the best way to calculate their dividend yield, one, I want to show you guys the dividends have been dropping. I'm going to be transparent. They've been going down ever so slightly. First it was 10 cents, then 9, still in the 9s, and then we dropped to the low 9s, and now we're in the low 8s, which is definitely a bummer. Are they going to be able to turn it around? I don't know, but I ran the numbers already. And so the way I did this was, you guys probably aren't math nerds. I'm a bit of a math nerd, and it makes a lot of sense to me, so I hope I can explain it well. So I took all the dividends, and I added them up and divided by the factor of the number of dividends, which was 5, to get our average. Then I multiplied that number by 52 because we get paid 52 times every single year because it pays out weekly. And then I took that number and I divided it by the current price, which is $5.65, multiplied that by 100 to get a percentage, and boom, there you go. Now, the only thing we're not including in this is the price depreciation that we've seen, which is about a 13% drop. So it's a little bit harder to factor that in. We're going to do that with our $100 investment every single week. But again, we're not dripping. We're pulling the cash out. So that will be something to note. If you're looking at this as a calculation and you want to make $100 a week with ULTY, the price has been going down. But with dividends, it's better than you think, which we're going to check right now on our dividend reinvestment calculator. I hope you guys are enjoying these a little bit faster paced videos. I'm really getting into these weeklies and they have been absolutely amazing. Now, if you're looking for a brokerage that has the weeklies, use my referral code down below for Moomoo, which is doing a bunch of promotions all the time for new users. All you have to do is put $100 in the account and they have a bunch of benefits for it. Plus, the main reason I really like these is because Moomoo puts all the weeklies on immediately. I have not seen them appear on any other brokerage as fast as they are on Moomoo. They have all of them. It is absolutely amazing. It's a great and simple way to trade, and I like it. I'm a fan. I've been using it for the weekly challenge, of course, so that's why. And it has worked out really, really well for me. So the drip calculator. So if you're interested in ULTY, I vote Moomoo, but of course, not financial advice. ULTY since March 13, since it did shift to paying every single week, we put it in the drip calculator, and it's actually crazy. It's not negative. It's not negative. You would have made $41 with your 10K invested in the last month, which is not great. But I mean, look at the rest of the market. For the last month, being positive is actually impressive. Now, one huge factor too is look at the number of shares you can get. With 10K, you can buy 1,600 shares. Still, mid-March, you can actually see you would be up well over 12.5%, which is insane, all on ULTY. And then, of course, the market tanked. Everything's been going crazy. And boom, the dividends did slow down, which is a bit of a bummer, but it's what comes with the territory of these weekly payers. Now, again, like I said earlier, I want the NAV to be consistent, and that's what I'm hoping for more so than just income from this one. So let's do our calculation and find out how much money you need to make $100 every single week, because I guarantee it's going to be less than you would expect. I have everything plugged in for our calculation, and it's pretty insane because we don't have drip on, but we're paying out every single week. Share price is really low. We're not factoring in the annual contribution. Now, here's what I did, though, because the actual yield is higher than what I have inputted because I took out 9.5% for the decrease in price over the time period since it converted to weekly. Now, I know what you're thinking. I don't know if the price is going to go up or down. I'm just using the data that we have. So it's very assumptive what we're doing. All in all, if the market rebounds and a lot of things do really well, I could see ULTY going on a little bit of a run, or at least trending upward for the most part, and you could get a double whammy of price appreciation and dividends, but it also could do the opposite and go down. I don't know. I'm not a financial advisor. This is not financial advice, but this sure is a lot of fun. So with one year invested, of course, because our drip is off, we're doing this for 1 year, you need $5,200 in dividends per year. One share, we're barely short at $4.38, but we're going to kick it up. We can see with 50 shares, our investment is $282 and you're making almost $220. So we're going to really have to factor this up quite a bit. 500 shares is going to cost you $2,825, and per year in dividends, you are going to get $2,189.40, which is absolutely crazy, but we still need to at least double. Whoa. 1,000 shares invested. This is going to cost us a little over $5,000. So $5,650, not a small amount of money, but we are now getting almost $4,400 a year, which is crazy. And again, we're going to factor this out to 52 payments, meaning you're getting paid all the time. Let's go to 1,200 shares and see if that gets us there. Just barely, a little bit over even. So our ending balance, the amount of money you have to have invested, $6,780. That's going to buy you 1,200 shares, which will net you $5,254.50 every single year in dividends. Now, we of course want to factor this in and see how much this is per week. So 5254.50, and we're going to divide it by 52. So you're going to get $101 and almost 5 cents every single week from ULTY at these factors. Again, who knows what the market's going to do? Who knows what the dividends are going to do? But this is really, really impressive because you're able to get a ton of shares very cheap because of how cheap it is. It might be the cheapest YieldMax ETF that I've seen, which is I don't see much of a downside to it other than our fear of maybe a reverse split. But so far, it's not doing bad. It's not doing bad, and it's getting a lot of attention, that is for sure. I hope you guys enjoyed this video on making $100 every week with ticker ULTY. As always, if you found value in this, don't forget to like the video and to subscribe. Helps me out, and it lets you know when more of my videos are coming out that you may be interested in, which is beneficial to all of us because I like to learn from you guys as well in the comments. Speaking of, drop your favorite weekly dividend ETF in the comments and let me know if you are buying ticker ULTY. Thank you guys so much once again. If you found this video enjoyable, you'll see these popping up on your screen right now, and I think you'll like them, specifically the full account of our weekly dividend ETFs, which just updated at the beginning of this week. It's been an insane journey, 27 weeks of investing in those ETFs. As always, thank you guys so much for watching. I hope to see you in the next video.